Hello guys, and glad to have you on board again. Today we're going to do a real quick express briefing out there. Just don't want to bother myself pulling out the cameras and stuff like that. So anyway, you just don't see my face and you don't have the context analysis, but we're not going to need it today. We're still in the same old thing, sentiment market, and I can definitely feel like the sentiment is deteriorated right now because of, oh, Trump got COVID. No shit, Sherlock. Of course, the guy is totally reckless, so I'm not really surprised that he actually managed to get it, even though he has the most is the most overwatched man on earth. I mean, probably everyone who's getting closer to it is closer to him is tested even twice or whatever, and still he managed to get it. So he caught it. That's just incredible. Totally anti-statistics once again. I mean, he's totally the guy who should never have caught it, but managed to do it. So definitely signs of a reckless behavior out there. But anyway, I mean, things are also can be random, so I'm not going to blame him. I'm just not so surprised. So yeah, how big of a deal could this be? The first things I'm going to notice is that everyone's pointing to the downside today, but not in a cataclysm type of thing, in which most assets are holding to higher low points. Europe might be making lower low points, but we're still dealing with some kind of a flag channel, whatever. Same thing goes for Nikkei. Okay, so it is not necessarily right now the end of the world, a flashing red signal like you got to sell everything and stuff like that. But still, that is bad news, and it has possibly some more correlated effects that people might not necessarily be wondering at that point, like how much chances does he have to die? I mean, yes, some people die with COVID. Of course, this is the president, so he has the best healthcare possibly available on earth. So I doubt he's ever going to die. But still, I mean, he's a pretty old people. And even though they're going to try fighting as hard as possible, that doesn't mean he has a 0% chance of death. So I think smart money has to price that in. So this is probably what's at play right here. Pricing some very low probabilities. So I don't expect huge volatility out of this news, at least not at the moment. Okay, so now let's zoom into the risk factors, because this is where I think stuff is at play. Do we have enough maturity to consider that we are starting for another downside move? I think yes, we could. I mean, definitely in terms of decorrelation, recorrelation patterns, okay, if you have a look at this, you would definitely see that if we point things down to the current market top, we can definitely see the 61 to 38% ratio of this decorrelation pattern on both ways. Okay, we've recorrelated. Okay, still the problem is this decorrelation has gone to the downside, which means either something is starting or something is ending. I think this is something starting because of course we've gone from some pretty bullish move previously, and now those who were leaders are now the laggers. Okay, so we'll see all about it. But I think this negative decorrelation and the fact that the 61 to 38% ratio is down, I think that we might have terminated the decorrelation recorrelation phase, meaning that another one can start. Okay, so we could be on a cyclical opportunity out there. So now let's bear that in mind and try to have a look at the global visions of what's at play. So yeah, could we have terminated something and have made a market top? Yeah, I would say so. I mean, we do have signals on the trend channel and we do have a breakout. So when we have a breakout, because the signals we have in here are gray signals, but gray signals plus a breakout, and have a look at the sine wave in here in the back, we do have definitely appropriate context to sell. Moreover, we do have a divergence on top of it, so it's really nice signals on the trend channel and not the context, which somehow says that if we were to stay with this being the market top, which I think it is, then if we retrace down to this context, means we're accumulating. Okay, so if we go back to the support context with these structures, mean accumulating to the downside means a breakdown is very much down the corner, which I sincerely believe it is. It's just like what I say. I think the smart money, long-term investors, and all of those guys who can support the markets are fairly much waiting for much more attractive prices. So I think that if you want to buy, you're definitely going to ask for lower risk, therefore lower prices. So yeah, I think the buyers are still there, but I think they're asking for much lower prices than just these early retracement we've got, and that the usual impatient money is trying to gather or whatever. Okay, so I think we're not done yet, but I think we still have time to get there. Okay, so immediate bearishness, not necessarily. I would say just the next speculative area is, can we manage our way back to the bottom trend channel and see how prices react out there. It's very likely going to be a third range boundary. Remember that regarding the fact that we've gone fairly excessive in here, we can go from bullish to bearish, and that's exactly what we've done. So I think we've built a first range boundary and a second in here, trend channel time frame, okay? Which means there is a third range boundary to come in here. So I think there is, okay, third range boundary, and eventually later on building, I don't know, some kind of a range. But as long as we won't break this third range boundary, we'll still be neutral. So I think we're building a range at that point. So are we mature now to go bearish? I think not yet, but I think we did make a market top, and I think we're going to stay below it. If we have a look at the Dow Jones to Nasdaq spread chart, which is one of the many derivative assets reading we use in order to orientate risk management, or I use personally, okay? Definitely in here have retraced to the 61% fib being inside the context. We do have trending signals on the daily. Okay, we did have bearish pattern triggering, so we do have a bearish momentum on the daily chart on the trend channel with a freakingly excessive market preceding. So can we go bullish to bearish out there? Definitely yes. So I think that if we reverse out there, what we're going to get is not a bearish range. What I think we're going to get instead is a bearish trend emerging out of these things. So we could immediately retrace down, and remember that a trend has to break a support. So I think this is the area we'll get to target. And if we get out there, that means the Nasdaq is losing serious ground versus the Dow Jones. So we'll see all about it. Is the tech about to be once again the least performing sector, or crashing? Or when I say crashing, I mean this is probably too big of a word. But I think, is the tech going to be heavily underperforming the market? I think that's a big yes to me. Out of this decorrelation-recorrelation phase we just talked about, I think we're on the verge to start a new one. The question is the next one just going to be a tiny little thing just like that, or even worse than that, just building a short-term stuff like that, and then breaking it up? Okay, if we break this third range boundary to the upside, that means the tech sector could be even more overperforming later down the road. And remember that the 2000 bubble tech overperformance versus Dow Jones is something close like that. It's something like there. So if we were making new high points, which means we're going to unseen territories of tech overperformance versus more defensive industrial sectors, okay? So if that is a market top, then there's a huge long-term consolidation down the road. If we haven't done it yet, then there is a hugely stupid pattern down the road. I think this is the most probable, but that doesn't mean it's going to happen. Okay? So if we go there, we're going to terminate all this shit, which means probably a huge pain trade down the corner, in which I think slightly later on, probably tech overperformance will take over again, but it will take quite some time. Okay, until then, we also have a look at the Nikkei, which is, oh man, not that good, but gonna need candle closes. But as you can see, even though we're still dealing with consolidative channel, the pattern in here, oh, not that great. Not to say it's really bad. We've built a range, okay? We've tried to break up. We've broken the third range boundary areas just to reintegrate, hesitate, and flush away. Normally when we do this, this is definitely a fake breakout that has gone on. And as a fake breakout is now reintegrated, okay, normally we are breaking the opposite direction. So I don't think the end of the world in here is down the corner, but at least retracing to the previous supports, and then we'll see how prices react. Look at the volatility boundaries that are shrinking. So I don't think there is an enormous downside potential, but still, that is not something you want to avoid. That's a 10% drop on Nikkei that could seriously impact USD/JPY. And this is the next one we get to talk about. Oh man, USD/JPY. Oh, trends your friend, some people get to call it. And I would say once again, so many people, I don't know why people are buying the dollar, but just I think we're just accumulating for so fucking long. And whenever these things will pop, it's going to be an emergency exit on those things because so many people will get to be proven wrong in the same time. So, yeah, I don't know. I told you that I've seen a lot of troubles with the yen currency. So I'm wondering, when is it going to trigger? Until then, I need to be speculative, but I'm definitely willing to reinforce anytime we get there. I've reinforced those breakout, and the market says, all right, no way, we're going to fuck you first. So I decided not to take down these trades, taking some risks for these. I'm wondering if we are actually truly reactivating out there. So I'm looking closely at whatever this thing is going to be doing within the next 48 hours. I'm also looking at this, which is another risk factor, and oh shit, no way. This one is also sending some mixed signals. Okay, bottom, top, first, second, third range boundary. Okay, so the other day I signaled you the fact that we were getting out of this compression. Okay. Closing below it, but I told you we don't get out of the range until we break the third range boundary, and we did not, and we reversed just out there. So there is a huge problem because it's now triggering this, which is a price squeezing pattern. By the way, I've updated framework to version 3.8, but normally you should know about it. So this is the new stuff, okay? So now you've got a price squeeze, which means experienced stuff only. Okay, so yeah, we were price squeezing, momentum squeezing, so we're squeezing every fucking where. So it is going to be violent when we get out, but apparently so far we have tried, but not enough to get out of the range. So this is not a fake breakout, don't get me wrong. We haven't broke at all. It's just like we've gone to the boundary and rejected. Okay, so breakouts are still to come, but they haven't been yet there. Okay, so yeah, it was an attempt, and we'll see what it is. Eventually we'll try on the opposite direction and fail as well. So it's just, so far we have absolutely no clue from these sectors. So let me just sum up the core information in here as the usual conclusion we do, okay? In terms of risk factors, this, not great at all. The fact that we've reintegrated the previous breakout shows that the market simply wants to eventually run for the bulls, and there is a huge 10% downside potential on the Nikkei, which could drive some problem on USD/JPY, which is a risk factor, okay? In the same time, we've seen that the 30-year bonds, they're not yet signaling the downside I'm looking for to catalyze some kind of a downside consolidation move into stocks. So this one still remains pretty mixed. This one is negative for stocks, probably going to be negative as well, but not enough at that point. Not enough at that point. Okay, lots of things. Good, but needs to be confirmed. So if you get me right in here, you will understand that even though things are looking better for bears, they're still far from being confirmed. So there is no trend to emerge with this COVID news from Trump. It's just like it probably built a range market top. And until we remain below this market top, I think the bears have it under control, but still far from taking it over from the bulls. Okay? We have it under control. As long as we keep it, that's good. As long as we push the bulls to their boundaries, that's good. But are we going to break immediately? I wouldn't call for that blood. Okay? So still patience required. Don't be dumb to say, oh, Trump got COVID, I'm selling the support. Jesus, fuck. Since when do we sell supports? We sell supports only if they're ready to break down, and so far I don't see any of these probabilities down the road. We could break the short-term supports to get down the H1 timeframe ranges, but that's all I forecast at that point. That being said, it has been hell of a crazy week once again, pretty boring in terms of asset price movements, but lots of stuff that happened in Trump COVID. It's just like the latest piece of the maze of the puzzle. But anyway, even though this one is funny, we'll still have plenty of things to deal with right by next week. So I'm looking forward to this weekly update because we'll have plenty of things to debrief throughout the week and to forecast for next week. Until then, I wish you guys a pleasant day and a pleasant weekend.